Our next guest is seeing a once-in-a-generation opportunity in everything except the Magnificent Seven stocks. Let's bring in Rich Bernstein, Chief Investment Officer of Richard Bernstein Advisors, and our very own Steve Leisman. Welcome to both of you. Rich, all right, so I guess you're not super excited about Apple after the bell then.
No, Kelly, that's not going to have my attention. I think there's a couple of really bullish things that are going on today. Number one is that small stocks are outperforming large stocks, right? In your little opening, you did not mention the Russell 2000. The Russell 2000 is outperforming the Mag 7 quite a bit today, outperforming the S&P. I think that's a very bullish sign.
Yeah.
Right, because we know that profits are starting to reaccelerate. It says the market is starting to pay attention to fundamentals again. Second thing I would point to that's very bullish is that non-U.S. is outperforming U.S. That's similarly based on fundamentals. It's actually quite bullish. The third thing I would point to is that cryptos are under pressure. There's absolutely nothing fundamental about the crypto markets, and the fact that we have stocks based on fundamentals going up on a day when cryptos are going down, these are all fundamentally based observations. I think that is very bullish.
So it's not. So Steve, I'll turn to you because I hear Rich saying it's not just the back of a Fed pivot or anything like that. And I would add, though, it does seem, Steve, like people are running off with the conclusion that they're done hiking here.
Yeah, you know what I like about today, Kelly, is sometimes the market on Fed day or the day after the Fed is like a college kid that wakes up in the morning and say, wait a second, what did I do last night? The market's not doing that today. Sometimes they'll rally into what I think is a really hawkish thing, and I'll be like, what were you guys doing? And they'll reverse it the next day, or sometimes the opposite of that. The follow through, I think, is interesting. I do think there was. It's a little bit complicated, Kelly, but my take on Powell yesterday was I asked him the direct question, is your bias still to hike? And he said yes. He went on in the rest of the press conference to suggest, to me at least, that they're really in neutral. When he said, the risks are becoming way more two-sided. Doesn't mean they won't hike. The question is, do they have to be convinced to hike? And that's where I think they are right now, as opposed to being convinced not to hike. And that would be a bias to hike. I don't think they're really there anymore. I think they're at this place where, look, if the inflation data deteriorate, if it doesn't cooperate, if the economy doesn't slow down, yeah, they'll hike again. But they need to be convinced to do that. And when I look at the probabilities, I'm not alone. That's the way the market is trading. They really don't have much of a probability at all right now on any kind of hike going into March. And then you look at the probabilities of cuts. They're starting to get a little bit bold there. June, 58, 60%, somewhere in there. May, not so much, but then they start to get a little bit bolder. So that's where the market is right now, betwixt and between. Not thinking the Fed is going to hike, not thinking they're going to cut, just waiting to see. But I think that bias may be right in the middle right now in neutral.
Okay, well, it's somewhat encouraging for folks who want to be long equities. But Rich Bernstein, the Russell, which you mentioned, is up 2% so far today, the Russell 2000, but it has been punished this year and had been at lows of the year before now. How safe is it? How patient do investors have to be prepared to be if they're going to be excited about the opportunities here?
Oh, I think there's two ways to think about it. One, let's talk about short term and the kind of cyclical opportunity. The profit cycle is troughing here in the United States. And as long as the profit cycle accelerates, that argues for more cyclicality in a portfolio. We know that small caps are more cyclical. That's what's been scaring everybody, are some of the debt issues in small caps and things like that. Those are cyclical concerns. If corporate profits and corporate cash flows start to heat up here, those concerns will subside. And so I think there's a huge cyclical opportunity here in terms of the broader market. Longer term, though, we know that long-term returns are defined by valuation. And the Russell 2000 is less, if I'm not mistaken, less than half the valuation of the Magnificent Seven. So that would argue that longer term, small stocks should outperform the Magnificent Seven. And I think that's very, very likely over the next 5 to 10 years.